Good morning, this is Giuseppe Basile. I'm the analyst and trader. You can find at the blog FibonacciStalking.com. I also posted regularly on Twitter using the @FibStalker nickname. Good morning. Today is Monday, January 28, 2013, and it's 5:30 p.m. Italian time. I want to remind you that Italian time zone is GMT +1. For my series FibStalker View on Stocks, today I want to do a review of Goldman Sachs, ticker GS, which is traded on the NYSE. What you see on the screen is the weekly chart of this stock, and I want to show you a little bit how the stock behaved since the 2007-2008 crisis. Actually, at the highest price for the stock was 246 at the end of 2007. Then it was obviously battered down during the financial crisis that hit badly all the bank stock and financial institutions. And there was this first traditional short which offered this nice short at 195, which hit the first target in 114 and then the second target in 72, which was a sensible move lower. The next extension lower failed, meaning that shorts were not interested to keep bringing down the price of the stock, and actually the price of the stock went from lost basically 80%, went from 2050 almost 2050 to 47. So when it came back to 94, as we can see, we had an initial participation on the downside then, but then price picked up and failed the sequence of measured move lower on the weekly chart. After that, we saw a move higher, and this move higher actually was strong enough to break all the way halfway back. So the bears were not able to keep the price of the stock below the 149, and this was has been a very bullish sign. However, we have to notice that on the other side, between 2009 and actually 2011, in the next 2 years, price came back the first time in 2010, was not able to make it into the 120 area, and later on in mid and at the end of 2011, the price of this stock went below 103, showing that the bulls were also not able to keep price high. And that's exactly what when we have a wedge, which is what you see on the screen here with these orange lines. And here at 149, the bears were not able to keep price lower, and here at 120 area, the bulls were not able to push this stock higher. So we have a wedge, and price has been moving within this wedge basically since the beginning of 2013. We had this huge move higher here since basically July, since the time the world markets have turned around, and we can move into the daily chart to try to study a little bit in more detail the stock here. So I want to show you a possible level of resistance here for the stock that would actually keep price lower. As you can see, we didn't make to this level, the 129.80, but very close to it after the after that. In 2012 we hit the bottom of this move. Price actually came up to this level and then corrected all the way lower, and the level of support was the same level at which we had initial buy order here in this initial traditional move here, and that's the 90 level, the 91 level. As we can see, this level acted as a support in 3 different occasions over 2 months here, during mid 2012, and the reason we had this support here is because we had dangling orders in the 91 area. Now in the last few weeks and months we had this move higher, so this small setup here in 91 hit the first target in 96.90 and then again in, at 100, and it came back to test this level again and find long participation again. The next long setup was actually an extension. As we can see, the price was clearly extended, so we would in this situation we'll only get a limited reaction lower, and that reaction came at the next extension long in 113.50. We've used this this level here, 100. Basically we could not identify this level in advance. We identified this level by observing price behavior, but this was a very good candidate level for an anchor, because it was the high before the price start moving higher. So as we can see, rule still work, and this is a highly participated stock, so program trading is actually picking up the some expected levels to trace this participation area and support area. So congratulations to those who were entering the market at 113.50 here. As we can see, we hit the first target in 132, 133, and the second target was also hit at 142, 143 here. Now as you can see, price also came above this 50 level I've showed you. This level was able and this is the violation for this level of resistance that we identified before in the 129.80 area. While this level of area of resistance was able at the first test to keep price lower, it was not able at the second time. Actually, there was a reaction, as you can see, at these levels in 129.80, so profit taking, because program trading working on the short side has been taking profits at these levels, but then with this gap higher, price continued higher. So it also means that this area of resistance is not there anymore. Now there are no short orders here, and I believe if the general market will continue higher, we can keep moving higher in this stock. And I'm going to give you a very good setup that we need to watch. We'll need to watch in the coming days and weeks. If we get a retracement in the ES SP500 E-mini, this stock is probably going to correct into the 136.80 area, and that would be a very good entry point with interesting targets above. And the targets are showed here. The first target would be 151.40 area, and the second target would be a 159 level. So that's what we have to target in GS, Goldman Sachs. I think this stock will be offering at a very good entry point here in the 136.80 with a stop below 134.30. I hope this video review is useful. This is part of my FibStalker view on stocks, and I'm going to post this video in my stocks and ETFs page on my blog. So if you want to receive updates on GS and other stocks I follow, you can go to my website and subscribe to my newsletter. That's free. It only takes 10 seconds, and you will receive my updates on and setups on the stocks I follow, as well as forex and futures I work on. Thank you very much for your attention. Have a great evening and a great trading week. Bye bye.